What's going on, everybody? Happy Wednesday and happy post-election. The markets have gone absolutely wild with the next president of the United States going to be Donald Trump, the 47th president, and markets went wild. It was crazy. But with that being said, we can't be emotional and think that the stock market's going to go up forever. We have to be logical about our portfolios. And with that being said, with my account, in the past 24 hours, I basically locked in about $5,500 doing some profit ripping. I bought $130,000 in NVDY, and anytime that NVDY went above $130,000, I pulled that money out, and that happened 3 times in the last 24 hours. So I locked in $5,500 in gains because I know for a fact that once this excitement dies down, the hedge funds are going to want to lock in their profits. So they're going to sell, and when they sell, they do it in billions of dollars, and it's going to bring the market down again a little bit back to reality. So just wanted to throw that out there. But you guys know me, the first thing I usually go over on my videos is my Robinhood account value. So currently right now we're looking at $110,896.78. The reason why there's a significant dip, as you guys can see here, is because I am heavily invested in NVDY, and today was when they pulled out the ex-dividend from the share price. So this week's ex-dividend for NVDY was about $1.08 or like $1-ish. I'll read off the numbers in a minute here. But basically, because of that, my account dropped from $116,000 before the ex-dividend to now $110,000. So, all right, now let's talk about the YieldMax distributions for the first week of November. I guess second week. All right, now that I have the distributions up, let's talk through them. So for YMAX, the distribution for this weekly pair is about 11, almost 12 cents. For YMAG, it's about 0.2065. For NVDY, actually it was lower than what I said, I apologize, but it's $1.02. Dips, 61 cents. FBY, 83 cents. GDXY, 48 cents. Babo, 82 cents. JPMO, 35 cents. MRNY, 40 cents. And then plty, $2.02, which was actually pretty big. But don't let that fool you. I'm not a big fan of when funds come out. I want them to wait a little bit so that that excitement could kind of die down. And right now, because Palantir was accepted into S&P 500, it's actually the stock price for Palantir itself is blowing up. So there's a bit of some momentum there. So it might be worth a quick play, but that's not something I'm currently interested in. Now that we have those numbers out, we're going to kind of discuss the performance of these funds. All right, guys. So the first YieldMax weekly pair we're going to look at is YMAX. And what I'm going to do is I'm going to look at the distribution or the performance over the last 5 days. Hopefully in the last 5 days, all of these funds are matching what the S&P 500 is doing, or at least the underlying. And so in the last 5 days, YMAX has been up 1%. But now more importantly, let's look at the year totals. So over the year, it's down 10%, right? But I did a little bit of research into how much distribution this fund has paid out. So if you look at when this fund started, it's opened at about $20 a share back in January of 2024. Currently, it's trading at $17.70. But if you looked at the return for YMAX, or how much distribution they paid you back, it was about $6 a share, right? So the way you can calculate this, if you pulled out every single dollar from YMAX, right, this account, this 1770 would be about $23. So you would be up, I don't know, I'm pretty bad at math, right? I don't know why I'm in trading, but it's like, 20%, 25% gain. So that's actually not too bad. Even though there is a 10% decline in the last year, but how much premium that YMAX has paid is about $6.05 throughout its inception. That's actually not bad, having a $6 gain. Or it would be more of like a $3 gain, right? So you made $3 per share. So actually it's quite low. So maybe it's like 15%, 10%. But that was quite interesting. So technically you didn't lose your money, but the whole point for me whenever I invest in funds is I want the underlying or the stock, the ETF, the premium ETF, to be NAV neutral. if it goes up, that's an absolute bonus, but I don't want it to be losing, 10, 20, 30, 40, 50 plus % in a year. So that's unacceptable for me because I don't want to lose the money. All right, so now let's talk about my baby. NVDY has been the workhorse of my portfolio since inception. I've been doing this project coming up on the 6-month anniversary. Once November is complete, that'll officially be a full 6 months. But if you look at the year performance for NVDY, right, this is saying if you bought it at the year marker, this would happen. But there's times when people buy in at the top because they think it's going to keep going up, or they buy low. So everyone's number is different, right? And everyone's performance is going to be different, right? But for me, I actually bought pretty high back in May. So I bought somewhere around like this 26 number here. And so technically it has gone down, but because that 26 stayed relatively even in how much distribution this fund is paid out, I'm actually up quite a bit of money. So the way I look at it, right, is since inception, NVDY has paid you out $23.39, right? So if you look at this number where it's at right now at 26.64, if you add $23.40, right, that's what, 27.47. This fund would be at about $47 a share, right? But so you basically would almost make your investment back. So that's pretty good. Now let's go on to the next one. So Meta has caught my attention because of the distribution it's been paying out, and it's been kind of under the radar and really hasn't been noticed too much. Over the last 5 days, it's down 0.25%, right? Not too big of a deal, but in the last year, it's only down 3%. And on top of that, for Facebook, they paid out about $11.70 in total distribution since its inception back in, what is this? Basically a year ago, if that. Yeah. Right. So add $11 to this 1960. I mean, that's $20, $30. So that's actually not that bad of a return. And it's cash, so NAV is being stable. This is definitely something to look into. Initially, it started off kind of hot, and then it, of course, with all the YieldMax, they kind of like halfway through kind of start tapering off a little bit. But that's actually a pretty good metric. All right, let's move on to Palantir. Right, this fund is relatively new. I don't really want to invest in it just yet, but it does look promising. They're super high gains. The premium payment of $2.20 is fantastic, but that might just be a carrot to kind of get you into the carriage. Not going to invest in it. I think it's overpriced right now. And when I see this number at $50 or $60 a share, from the past performance of these YieldMax funds, I've seen them go down, 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 down. So the fact that it's at $60, I feel like it has a lot of room to go down, which I don't want to happen. Moving on to the YieldMax Gold Miners Options Income, so GDXY. This, let's see how much it paid out. So since its inception, hasn't been out too long. It's been out since about May 21st. So what is that? Basically since I've started this project, so about 6 months. It's down 16%, and it's only paid out about $3. So with that $3 of total distribution and this specific share price of $16.67, you break even. Not what we're going for here. And I didn't even want to talk about this, but I did just want to point it out, where not what we're looking for. It's got to be above to even consider investing into. You might as well just take that money and throw it into SPY. I don't know who would invest in this dumpster. Right. And the last one we're going to talk about is JPMO. So for JPMO, it started off at about $20 a share. Currently it's at $19.35. So it's only down 3.68%. And then if you look at the actual total distribution, it had about $5 in distribution. So technically, if you invest in JPMO, I mean, the yield isn't super sexy crazy, but the NAV is relatively stable and you get like a premium. So that's not necessarily a deal breaker, but I don't know. It's hard to say. It's hard to say whenever you get like a massive distribution from NVDY or Misty, that anything less than that, it just doesn't seem good enough. And this is kind of the point I want to get with these YieldMax ETFs now, is that more than anything, these are momentum plays, right? You jump into a stock when there's momentum, the premiums are going to be good, and then the appreciation is probably going to be better because of the premium payments and the upward trajectory of the underlying. But to kind of hold on to these ETFs for long term, that's debatable. Maybe you can get away with, I think, what YMAX is my, let's see, let me go back here. 10%. No, I think I liked YMAG better. Did we even look at YMAG? Let's go to YMAG real quick. Yeah, actually, more than anything, YMAG is something I would invest in because like 3% over, a year period is paid out, $5.63 of distribution. You'd be a net positive right now if you were investing in that fund. So I don't know. We'll see. Right now, my kind of big momentum play is NVDY. I don't think AI is going anywhere in the short term. I think the parabolic movement of NVDY is over. So you're not going to see like 180% gain over a year. However, I do still think that NVIDIA is a great company. AI has just started and everyone is starting to understand how to utilize AI workloads, and just the demand for AI is just growing and growing. And who has the best chipsets on the market right now? It's NVIDIA. All right. So that's kind of why I'm super bullish on NVIDIA and why I'm not really going to sell out. I think this momentum of NVIDIA is solid for another year, right? Because they have what's the term? A competitive advantage, right? They have the best chipsets right now and everybody wants to buy them. And until somebody comes up with a better product, they're going to be dominating the industry. They have a 1 to 2, maybe even a 3-year head start. So that's why I'm super bullish on them, right? So I will maintain my investment until I pay off this HELOC loan. And once that HELOC loan is over, everything is Gucci, right? But I'm going to discuss the payment I'm going to make because I have about, 4,800, almost 4,900 shares of NVIDIA. My payment for this month is going to be roughly $5,000. It's going to be about, 4,900 and something. I did quick math. I'm not going to go into any of my Excel spreadsheets or graphs because it doesn't have all the data between all of my other YieldMax investments and like my profit hit and run stuff. So this was just a quick update to look at the weekly distributions for the first week of November, the Group B pairs. Yeah, but that pretty much wraps up the video, guys. Let me know what your thoughts are about this video, the different funds I talked about, what you're invested in, because I love to hear what you have or read your comments. It brings me great joy to see what everyone's doing, and maybe we can kind of help each other out to determine, hey, this is a good idea. Hey, this is a bad idea. I'm trying to grow that community. But yeah, guys, enjoy your journey. Have fun out there. See you in the next video.